So let's get into real estate investing strategies that work in the Birmingham market. And this is a collection of strategies that I've seen working in Birmingham. A lot of them are ones that I've done myself, and I'll try to include some examples. Some of them are just, people I know that are having success with certain strategies. And these are things that I think any of y'all can look at and say, I want to take steps towards this in the next couple months. This is the direction I want to go. So that's why I wanted to kind of share these, just get the wheels turning. And also, I know for me, the more tools you have in your toolbox, the better you can do as an investor. Like I was talking about Airbnb. Once I try one of those, that's kind of a tool in my toolbox. Like if I see a certain property, I can say, oh, that would work really well as an Airbnb. Right now, I know some people who are having success with it, but it's not something that I can pull out and use as an investor. And so as you learn about more opportunities, you'll recognize them when you see them, and the better off you'll be. So the first thing I wanted to talk about is house hacking, which is kind of, I guess, a hot strategy. Bigger Pockets just put out a book on house hacking. I haven't read it yet, but I think it's supposed to be really good. But there's a couple different ways to do it. And I think it's one of the best ways to do your first deal, because anytime you use your house as a investment, it's extremely, like, it takes a lot of the risk out of it. You'd be paying your own mortgage anyways and living somewhere anyways, but now you're also utilizing it to make an income or make a profit. And so I think house hacking is a really great way to start. And the first strategy is own to rent, which is super simple. You buy a house, live in it, and after a year or whenever you decide to move out, you just don't sell it and you rent it out. And that's the way I got my first rental property. My wife actually bought the house, and then we got married and moved out and held it as a rental. And those tend to turn out pretty well, because if it's a place that you're willing to live in, a house that you like, you're probably going to find tenants that are pretty good. It's probably in a good area, and you already know the house as far as maintenance and that kind of stuff. And you don't have to go out. The other huge advantage on these and a couple of these strategies is that you can get into a house for 3% down, 5% down, and you can ride that appreciation kind of without putting a lot of money into it. And you can do that a couple times. There's people, I don't know anyone personally, but I've heard people on different podcasts that, especially in hot markets where this is like all they've done, is buy houses that they want to live in and then move out, buy another one, and just hang on to all of them and build up 7 to 10 really nice rentals over 10 years. And they're manage them themselves. It's pretty easy to manage these type of properties and build a good portfolio that way. So the next strategy is, I guess, a little bit more uncomfortable. Like, some of these are things that you're gonna you or your spouse are gonna draw the line and say, I just can't do this, or I refuse to do such and such. And that's fine. That's kind of why there's a lot of different ways to do it. But renting out rooms is something like in Birmingham. We're going to talk about multifamily and how it's kind of limited. But in Birmingham, there's not a lot of multifamily. So buying a house and getting roommates that you pay you rent every month and help you pay down your mortgage is a great way to house hack. And actually, that's what my wife did when she bought that house. She put like 3% or less down, and they gave her a bigger mortgage than she could really afford at the time. So she got a roommate, and that roommate, helped her pay her mortgage every month, pay the utilities, and so she was doing that, as a single person, and really helped her to keep her house that she had just bought. So that can be good if you're in a situation where you can do it. You can really, you can live for free pretty easily. Airbnb is something I'd really like to do is whenever we move is either build out or buy a house that has like an Airbnb guest house or in-law suite or something. Just because, there's a lot of synergies from Airbnb that if you look at how Airbnb works, you have your nightly rate, but then you also have your cleaning fees. And then you also, your guests are going to expect internet, and you've got your utilities. So if it's a separate property, you've got to go out and buy internet every month. You've got to send a cleaning lady. You have some kind of inefficiencies, but if you have that Airbnb in your same vicinity, you can capture those cleaning fees. You don't have to spend extra on the utilities. So it becomes a way more profitable model if it's right there with you. So that's something that is maybe a little less, potentially a little less intrusive than renting out a room full time. If you just have Airbnb guests on the weekends or, occasionally, that's something that I'd really like to do at our next house. Multifamily, you'll hear about people in other markets talk about this a lot. And I have a client who bought an amazing fourplex in Irondale. It was all 3-bedroom, 2-bath units. It's a huge building, but it's like one of a kind. I haven't seen anything else like that in Birmingham. So multifamily can be great. You buy, let's say a quadplex or a duplex, live in one side, rent the rest of the building out. And again, it's pretty easy to live for free. The problem is a lot of our small multifamily inventory is in areas that are not that desirable. A lot of it is, almost all of it is pretty old. So that's something that if one pops up on MLS and that's what you want to do, like you've got to jump on it fast. That's what we did with her property that we got. And the last house hacking strategy is a live-in flip, which, by the way, you can kind of combine strategies. So we did a live-in flip that now we moved out and we rent it. So it's kind of own to rent, and you can combine all these in different ways. But a live-in flip is buying a property that needs renovations, trying to get it cheap enough to do those renovations and still have some equity. It's we'll talk about areas that are good for flipping. Definitely you want areas that are appreciating, that have good retail markets. And you can do a live-in flip two different ways. So the one that we did the whole renovation. We bought the property, did the whole renovation, and then moved in. And that's pretty, it's pretty easy. I mean, other than me working on the renovation, living in a construction zone can be stressful for people, so you want to consider that. The other way to do it is to kind of renovate as you go. And so I have a husband and wife that are clients that they've done 2 live-in flips that they renovated as they went. They did one in Homewood and one in Southside. And on both of them, I mean, they did a lot of the work themselves, so they really kept construction costs down, and they got huge appreciation from spending 2 years in Homewood and then 2 years in Southside, and converting a house from being kind of an ugly duckling to, a beautiful renovated property. They made out really well, and now they live in a house and don't have a mortgage at all on it. So it can be really powerful to do the live-in flip model. So rentals, Birmingham is a really attractive market for rental properties. People all over the country, all over the world, are looking here. And that's something that you kind of need to be cognizant of. There's a model called Turnkey, which, you guys can, it's mostly out-of-state buyers that buy turnkey rental properties. And these are properties that are renovated to be rentals. They're usually either in C-class or B-class areas, and they're bought by people that are looking for cash flow. And kind of the advantage to them is that it's all done for you. So hopefully there's already a tenant in place, there's already a management company in place, and the day you close, rent is coming in, that month. So you pay a price, you pay a premium price to get that, but that is an option that's out there. You're going to find sellers that have bought turnkey properties. So that's something that you kind of want to have an awareness of. The BRRRR strategy is buy, renovate, rent, refinance. And that's kind of at the opposite spectrum of turnkey. So that you're buying a lot of times a house that has no tenant, needs a ton of work, and you're going to do the work, get it rented, and then refinance it. And hopefully you'll have a lot of equity in this situation. Your purchase and renovation will be well below the market value is the goal. And then there's also a strategy, I don't know what to call it, but it's kind of in between turnkey and BRRRR. And I see, we'll talk about this a little bit, but I see a lot of people, for my clients, they'll kind of do that in A-class areas. So they'll buy a house that is not like a total flip, but it's not a brand new renovated house. It's kind of like the ugly duckling of Hoover or Vestavia, where it's just a little not nice enough for a homeowner to want it, but they don't have to do a whole lot to make it a great rental. And I would say, you can find, especially, those are probably A and B areas where you can find properties that are pretty nice, very livable, rentable. They're kind of priced right at the market. The numbers are pretty good. And it's kind of in between, pricing wise and work wise. It's kind of right in between turnkey and burr. Multifamily is another way you can go. These are apartment buildings, really from 2 units on up. And you look at some different metrics. There's a lot of different things construction wise, financing wise, that you get into on multifamily. And and this is something that I'm definitely still a rookie at. I'm closing one for a client on Friday. That's been a good learning experience, but I'm hoping to do a bigger one for myself next year. And that's like I think it's a good place to go. I just don't see a ton of it in Birmingham that I hear about people doing a lot of multifamily deals in other markets. But it is out there. I mean, there's some good buildings that I've seen driving around. And then there's other commercial that's rental, like self-storage, mobile home parks. There's, all different kinds of kind of specialty commercial. I mean, retail centers, strip malls, all of that, I guess, would qualify as rentals, office space. And those are, I guess, very different from the residential type rentals that we're looking at. And I haven't done anything that would qualify as that. And then I just went ahead and threw in creative acquisitions, because, you can use these in flips. A lot of people do, but we'll just cover it here with rentals. That's the way I've used it. So owner financing, they're basically having the owner carry the mortgage for your purchase. I've done that a couple times, and that can be really good if you work out the right terms. And we'll definitely, a lot of these things we're talking about are things that we're going to do a full class on and really deep dive into them. Owner finances and the creative strategies are definitely one. And hopefully get Brian to come on here, because he's done lease options. I know he's done some subject to, and I've done one subject to, but lease options is where you sign a lease with an option to buy, and it ends up looking a lot like a purchase. And at some point, you can purchase the property, or will want to purchase the property. Subject to is just taking over the existing mortgage. There's a lot of disclosures that you would want to make, and your attorney will help you with if you're going to try to do something like that, because you own the house, but the seller still owns the mortgage, which is a vulnerable situation for them if something happens to you, I guess. So, and then those three, I think, just from listening to people nationally, I think all the creative acquisition stuff is going to be coming back around in the next few years and becoming more and more viable, more and more popular, because we're kind of seeing it on the coasts, and whatever's happening there kind of starts to work its way here. And then I included tax deeds also. I've done some tax deed deals, and I know people that just that's all they own is tax deed rentals or tax deed investments. And that is a really deep, complex subject when you really get into it, as far as risk and what all the procedures are. It can definitely be profitable, but that's another thing that would be a full session just on that to really cover it. But it is a way that you can buy rentals. So a couple things on flips. Basically 3 different types of flips. So we have retail flips, and that's what I would call the one that I talked about earlier in Glen Iris. That's a property that you buy, you renovate with the purpose of a homeowner buying it from you and living in the home. And usually you're going to make these pretty nice. Like almost always they'll need granite countertops, stylish tile work, and these are what you think of when you think of a flip, when you think of the TV shows like Flip or Flop or whatever. That's what a retail flip is. And I want to just make an observation and kind of a warning that be really careful trying to do a retail flip in Hoover, Homewood, Vestavia, Mountain Brook. Those areas, I've seen more people lose money in those areas than anywhere else, or get stuck with a house for a couple years. I've seen more people have trouble in there, and I don't know why it is. Buyers in those areas definitely have higher standards than buyers in some of the other areas that are good for flipping. So that's just something to think about. Like, you need to really know your numbers to do a flip in those areas and really be confident. Irondale, so areas that are really up and coming, where there's some older houses that need to be fixed up. Pretty much if you see a lot of other people flipping, then you know it's probably a good area for flipping. Irondale's a really hot area. Alabaster, I just did Forestdale, which is, a lot of people wouldn't think you could do a retail flip and sell for 165 in Forestdale. But that's happening, and there's a lot of older houses in there that could really use fixing up, but they're not too old, which is kind of a distinction. Like, they're maybe 1955 through 75 is kind of a lot of those houses in Forestdale. When you get into, this is another thing that you want to be aware of, is when you get into houses that are coming up on 90, 100 years old, there's going to be things that pop up in the renovation that you just can't predict. So those are just kind of a couple warnings on retail flips. In Birmingham, this is kind of the other side of turnkey, like buying a turnkey rental, which you can do, and what I've probably sold 4 or 5 of my flips this year were turnkey flips, and those are properties that I bought and renovated and rented to a tenant. So it's BRRRR, but at the end you sell to an investor. And I would say all of mine, well, I did one in Eastlake, but all the rest of them have been more B-class areas. And on these are lower, honestly, these are lower risk and percentage wise, the returns are better. So you may only make, like, let's say you sell a turnkey flip for $80,000. And you make, I don't know, $10,000. That's actually really good. Because you're making 10,000 on 70,000 roughly, something like that. With all expenses, you're probably into it less. And, I see people making in the 20% returns range on turnkey flips, 20% and up. Whereas on a flip over the mountain, they're probably like 15% is great. A lot of them are more like 12 or 10% if you really add up all the numbers. So turnkey flips are good. You kind of renovate them specifically to be rentals. It's a little bit different than a retail flip. I mean, you still want to make it nice, obviously, but it's more nice for a tenant as opposed to someone who's going to own the house forever. And so turnkey flips, I really think, is not a bad way to get started, especially with the amount of investors who are looking at our market. I think you could list a really nice looking rental property, like with good pictures and information, and sell it on MLS pretty easily. And then I called it quick flip, which is basically wholesaling. And I think my understanding is, there's two ways that as an agent, I think we can do quick flips and, not run into any trouble, I guess, with our broker or keep everything between the lines. One is to double close, which is where you purchase a property and then more or less sell it the same day. You've already lined up someone to buy it from you. And the other is what's called wholesale, which when you get a really good deal on a property, you pretty much either clean out all the junk and spray a bunch of Febreze and then list it, or just list it as is. It's kind of like it's a flip, but you don't really renovate much. You just kind of spruce it up enough that people will go in there and not be grossed out. And these are, I've done, I would say both of these are probably advanced. They're not things that I would recommend trying to do unless on the double close, you need a really good network of investors. And you also need to be willing to buy the property yourself if you can't find a investor to buy it from you. So it's more something that if you get a really good deal, I think both of these, or if you get a really good deal and then you say, all right, what am I going to do with it? These are options that are out there, but you want to have a backup option as always.
Hey, Rob,
Yeah.
Question. With the turnkey flip, how long do you want your tenant to be in there, or what kind of lease would you recommend them sign? Will it be like a year-to-year lease, or maybe a 2-year lease with down deposit, or?
Yeah, I think buyers would like seeing a 2-year lease. There's a company in town, Spartan, and they try to do all their leases as 2-year leases. It depends. I mean, like my property manager, I just turn it over to a professional property manager, which I would recommend because unless that's your core business or something you want to do every day, um, your buyer's going to be happy about the fact that he's got a professional managing the property. And I just tell him to get it leased with a good tenant. Some people do tell him, like, let's get a 2-year lease. And what he does is when he gets a quality applicant, he says, this property is available for a 2-year lease only. And if they say, oh, I can't do that, then he says, well, let me ask the owner. So if he says, I've got a great applicant, but he doesn't want to do 2 years, then you've kind of got the option on to do it or not. But I think it's preferable, like from the out-of-state owner's perspective, they like to see that. So, and then this is what I wanted to talk about a little bit. From the brokerage standpoint, like I kind of look at a lot of when I'm helping an investor buy, I look at it like I'm buying for myself. Like I take the fiduciary responsibility seriously. And so you can help your clients execute any of those strategies above: house hacking, any of the variations on that, rentals, flips. My favorites are A-class, buying kind of the least pretty house in Hoover, Vestavia. B-class, like turnkey. Like I prefer helping buyers buy the nicest B-class properties that have updated roofs and they're already ready to go. They don't need any renovation. They're rent ready day one. And these aren't necessarily renovated recently. They're already ready to go. And flips, those are great. I mean, you get a lot of experience. You get 2 transactions out of one house and one client. And so those can be really great. And then multifamily, a lot of times are bigger deals, more complex, and you get to learn a ton from getting into that. So, and I think that's in my own business, I've learned a lot from helping clients do things that I want to do. And I would definitely take that into consideration that, you know, working with people who want to invest or investors, you should look at that as an opportunity to learn as much as you can yourself that you can use. And again, Birmingham has a ton of demand from out-of-state buyers. That's just, you know, if you have any listings in rental areas, you probably have seen that, but it's really picked up this year. I think it's going to pick up even more next year and might start to get kind of crazy. But we're kind of a hotbed for that. And then the express offers opportunity. I think I did 101. And so I think that tool from EXP is going to be something that's really interesting to see how they roll it out. A lot of potential opportunities for us. And if y'all want to unmute and kind of talk about what you're seeing from that, what your thoughts are on express offers,